Good morning. All right, so I don't know, stock market must have got a shot of some of that coronavirus vaccine and came off the mat yesterday with a vengeance, rallying back up. But here it is, up at some resistance, and we'll see how far it can get up into this area over here. You see, giant bottoming tail bar, and unusual bottoming tail bar because of the range expansion. And it wasn't a range expansion bar that occurred after it's been going down. I mean, if we had prices going down like this, right, and then they start to accelerate to the downside in a vertical manner. So just like we look for wide range bars at the end of a move, and it could be the top or the bottom, and prices could have been going up, and you get a wide range bar. And historically, that is an indication that you're getting close to the end of the move. And things stall at that point. We don't know how much it's going to correct sideways, but we read it as a picture where momentum is going to begin to stall, and that strong trend is going to end shortly. Right? Something like this, right? It's going down like that. Now we get a wide range bar like this, where it was pulling back and then going back up, and you get this sell off, and it recovers again. That range expansion has to contract. I mean, historically, what happens is it's just going to need to calm down. So, yes, it's a positive event that it went down and violated this support, went down to the next support, and came all the way back up. Maybe it's end of year stuff. I don't know. And let's, just sticking with the charts, what happens now is it chops around maybe a day or two and consolidates the big run. It's like if you just ran, 5 mile race and you're tired. And so now you get a little bit of a rest and chops around a little bit. And the assumption is that it'll go higher. We'll see if that occurs. Right. So in other words, it's got to stay up here. Right? So just like a wide range bar, we kind of just eyeball that and say, all right, let's see if it stays in the upper part of that range. Yeah, you could be looking at like that. Okay, here's on on a closing basis, let's call it 36.40 and so on. That it stays above, wiggling around, and then eventually breaks out. So we'll see. We still got plenty of days. We don't know how this week is going to end, but that would be a great candlestick to have within an uptrend. I call it a correction bar or a correction candle, meaning you can see these candles are making higher lows. And these lows are relatively close together. And then this breaks below and it comes back up again. So the effect of that is it's taking out stops, hedge funds, mutual funds, regular old people. They're hitting the bid. Stops getting hit or they're getting short and so on. Right? In the green room, we got long this right off of the low. Got wiggled around a little bit, and then we got a nice chunk of it, and didn't get the whole thing, but got a nice chunk of it. I didn't think it would go that far. It's a big bar. Anyway, uh, let's see where the rest of the markets go. Just take a look at SPY here, because that doesn't have the 24-hour thing. That's a bad pick. So let's remember that happened yesterday, and we started using SSO because it had intraday. I'm surprised that got that on the daily chart. So now we've got this bottoming tail bar within the range. And this is what we talked about yesterday, was the expectation that prices were going to trade within this range. And that's exactly what they did. And they closed not in the middle of the range, more toward the top. And I mentioned yesterday, when things get a little wild, bigger ranges and tails, look at this on, as if it was on a closing basis and, uptrend, pullback, up, and a minor pullback so far. A big mess over here on the hourly chart. And pretty much the same interpretation would be needs to consolidate and, just, I guess, the way I say it, rest here a little bit after running the race. Things, volatility to contract, ranges to contract. And that's typically, once they do contract, is where you get the next big move. So for today, I would think I would think maybe it's going to be a little boring trading still within this range. Now, if the ranges stay wide, well, that could be okay. But as we get into this shortened week, I'd be surprised unless some news hits that this thing can break out of the range. We clearly have a line in the sand of support and one of price resistance, the top and bottom of the range. Okay, let's look at the NQ, see where they're at. Big range bar so far. This is more or less what the expectation would be. Chopping around in the upper part of this range. Qs, somewhat similar to SPX, but came down to support, rallied back up, closed above its opening price, and ended the day yesterday with little hourly sell setups, which started heading down and then flipped right back up again. The futures, bottoming tail, and YM down here a few ticks. Big tail. Look at it on a closing basis. It's still just going sideways. So yesterday was just a roller coaster ride, and it ended up where it started, at about in the same spot. So no resolution there. Russell come down hard. Back up. Let's take a look at the ETF. And so it gapped down and it came all the way back. Left topping tail up there. Hourly sell setup. Go back here for a second. Yeah, not so sure. I think pretty much the same thing of consolidation day. I guess this becomes a little line in the sand at 1940. The momentum move up. There isn't much to stop it if it starts to drop. This part of the day could be interesting early on. We'll see what happens. Bonds just a giant mess. Stay away. Just stay away. They don't know what it's going on, whether going to break below here. It's been hanging here for quite a while. And while there's red bars ignored, this bottoming tail bar and this green bar historically, which would have went up, it didn't. And so we're getting, just expand this, lower highs, higher lows, inside bar. The spring is being wound here. Maybe you got to wait until the new year to see which way this is going to take off. Got plenty of room lower. And the fact that it's going sideways here, if it could get through here, it could make a significant move. Anyway, for now, we'll just expect that it's going to continue to do the same, flip-flopping around. Oil coming in a little bit. So wide range bar, you got to be careful with these. Because if the momentum stalls, as it was here, narrow-bodied bar, and then it picks up again. I'm saying, okay, that looks good. But it's the potential to form a breakout bar failure. Now, what it doesn't have, according to the MTS textbook, is a minor topping tail. It's got a little bitty tail up there, but those of you that have the manual, there's a little bit more of a tail with the range expansion bar, but it cleared a couple of highs, and then an inside bar, and then we'll see next week if it'll break that low. So right now, it's more of a pattern of just stay away for the moment. Messy, getting messy again, kind of indecision going on there. Tail on the top, tail on the bottom, inside bar. I suppose after today, things are just going to, I guess, are going to just really slow down, get closer to the holiday. Pretty wild day. I wasn't paying attention yesterday over here. Pretty wild day. Again, that'll need to calm down. Just curious. Euro keeps marching higher. Of course, the dollar doesn't look anywhere near in sight of finding some support. I got my alert down here as it comes down to the low. Wow, acting well at 24,000. Look at the run up. And you think, okay, it'll pull back. That went up vertical with 2 bars, whereas this was a type of slow advance, very controlled until it got a little wild and pulled back. And so this creates this void below, but buyers are still there on the dip. So again, looking at it on a closing basis, went up and it's going sideways. It's building, we'd assume, a new level of support to go higher since it's forming bottoming tail bars. And you take a little bit of time. And that's what I'm talking about when, you get this giant range expansion. It usually takes some time to calm down and then resume. It could be a quiet day, and we'll see what it brings. See if we get any surprises, and trade what we see. All yours, Dan.
Good morning. Yeah, I was sure shocked at the recovery yesterday, and you know how I always talk about it's just amazing how the media, their stories, just like leading a dog around by a leash. So yesterday, the sky's fallen with the new corona uh, thing over in UK and lockdowns and all the same industries getting whacked. And now today, the headline on CNBC is, "Oh, new virus, no problem." It's like, where do they come up with these stories? And then even Kramer, who I would say consistently, his view has been the stocks are overpriced. And today, with a straight face, he says, "I don't understand the bearishness on the street. Everything's fine." It's like, what? What did you eat for breakfast today? But we just do our same factory work every day. So our opens are fine. NVIDIA, we started with a call spread yesterday, like into a condor. We just need that melting ice cube for Thursday at 1 p.m. Microsoft, we did a put spread that looks great. And Facebook, we did a call spread, the 282.50 for next week, and that's flat line, so it's not gapping up with the market. Apple, we very noticeably saw this into the close, and somebody in the green room mentioned to me, yeah, they're starting to make EV chips for electrical vehicles, and I'm like, oh, okay, well, that's fine. And now today the story is they're going to make their full autonomous cars. And again, stories, people, psychology. We have different sectors in vogue all the time: Bitcoin, marijuana, electric vehicles, on and on. And so now we're in the electric vehicle mode. We were kidding in the green room because we had a call spread on Myrna saying what the risk is to the downside. I mean, everything's baked in. We knew that they were going to get their vaccine approved, and they did, and this still looks like another call spread. but we were joking. We said, what would make this catapult to 190? I said, what would be the impetus, the driver? And somebody in the green room said, oh, easy, Dan, they'll start making electric vehicles. And I laughed, but you know, that's the theme that we're in right now. Look at Baidu. Baidu announced here, I didn't get to it till it was too late. But look at this run from Baidu, 140 to 200, because they say they're going to get into the EV space. And you can't fight it. We just need a compelling pattern, and we'll either trade with or against it. But Baidu's on my bear call credit spread list. All right, let's continue. This looks like a SPAC to me, the way this thing came down and gapped up to 14 bucks. I don't know what this company does, but it could shape up into something. IAC gapping up on spinning off. Greg, I didn't, we use Vimeo, and I didn't know they owned it because they said they're going to spin off Vimeo. But we, in our chart of the week yesterday, we have put IAC in there as a quality 1, 2, 3, and also Piton as a 1, 2, 3. And we were long both these stocks in our advisory letter. But look at these things. That's one of my greatest setups. It really is one of my top 5. A 1, 2, 3, 4 from consolidation, or you know, this one was from a 180. And look at that beautiful move. Now it's gapping up $1.60, 15 bucks. So now it's on my watch list for a bear call credit spread. Unfold, YouTube's asking. Yeah, sure, it's a breakout. It broke out and you got 1, 2, 3, 4, 5 inside bars. Absolutely. One on the list. All right, let me continue here. So IAC, I got nothing. Echo Hotel. Had a big move yesterday. Maybe if we can get a 1, 2, 3 or something. MGNI. So yeah, one of you asked about it as a gap trade. I think you were saying it was a 6 out of 7 on Greg's 7-point scale, and I don't know. I like Greg address the scale. For me, I kind of simplify it just into 2 steps, kind of like Texas 2-step. I want a compelling gap, you know, with a price void, and then put it in a 5-minute chart and see how it sets up. But I personally, I'm not sure if I'd give that a 6, just because, you know, it ran from 20 bucks to 27 in 4 days. So I like gaps that are closer to support, where they're igniting a new move. Baby TTD, ELYS, gapping nicely.
I don't hear him either. Maybe he did. All
right, HE9. That's a big mess. Don't know what to do with that. Mess, no pattern. I think some of these were earnings. This had earnings. This was a bullish close, but now it's gapping down, so messes it up. But if it can claw its way back, if it can negate the bearish gap and take out yesterday's high, it's a breakout daily, weekly. CTOS, big mess. Though, I like this as a put spread. We're going to sell the 90, 80 put spread I like. Hussin 3.6, gap breakout up here. This trade's too sloppy for me. RMG. That's another one where it could give you a day trade, but you know it's gapping up after 4 up bars. But it's strong. It's all-time highs. Look at that thing ripped from $10. Fubo, it's extended, gapping up $6-7 here, far from the 20. Tan, it's you know me, Jake. You know our entry is down here, red bar ignored, close to support in the 20. It's a moving train. The Apple talked about. Plug. That's a moving train also, up 5 bars, but it looks higher. P-time we talked about. Yeah, JG and TJ I have right here in my list. Yep, 619. The gap's too big. I mean, when it's gapping totally off my daily chart, and I got to look for the weekly. So the gap's too big for me, for a swing trade. With people have different thresholds of gaps. So it could be a day trade if it sets up, but for a swing, gap's too big for me. It's not my strike zone. Hassan, we looked at. Lazar was on our list yesterday. Nice. Look at that, negating 5 red bars with a price void. I think that's moving up with whatever Apple news. SIVB looks great, William. That's a beautiful breakout because you got this gap negated. Looks fantastic. So that's going on the list. Gnrc was another one from yesterday I like. Out of the money put spread, wide range igniting. Puerto. Well, Carlos, we can talk about those patterns later, but the quick answer is it's a defensive strategy that you have to feel comfortable as if you were almost putting on a new trade there. So would you put on a new bear call credit spread on Zoom? I wouldn't. It broke out and it came in back to support. I wouldn't. So that's the reason why. That'll wake you up. Copen, TJ, I don't know what you want to do with it. I mean, look how far from the 20 it is, so it's not my wheelhouse. YouTube's asking about Zuo. Yeah, I like the gap reversal. Yeah, I like that one a lot better. So you just got to put it in a window and see what it does. So, market coming in here a little bit from the pre-market gap, but maybe 5, 10, 15-minute high. But I'll put it in a list right there, sure. And BCRX, 5-minute for short intraday trade. Well, it's, and we talked about this yesterday on gaps. I look at the pre-market pattern, and this is extended pre-market, and it's going sideways. So I don't know. I don't know I don't know the setup yet if you're going to short BCRX. So you just got to put it in a 5-minute window and see what picture sets up. CPRT, well, that would be maybe a 30-minute high trade mark. It's right there at the top end of the little overlapping bars, so I would not rush into it. WFC, continuation for long intraday. It's in a trading range, Diego. This is not a breakout until it breaks out. So you can put a alarm a dime before yesterday's high to alert you, but compare this to, Zuo has cleared resistance, Gnrc cleared resistance. No, not Zuo, SIVB. Look, this is superior to WFC. Look, this has cleared it. So this one looks fantastic. Look, APPN was on my list yesterday. That could be a good 30-minute high. LI is on our list, making the turn, maybe 30-minute high. But SIVB is the best looking long I've seen so far. So I'm going to put that in a window. It's just, market coming in. I don't trade in the first 3 minutes, but it looks fantastic. ATOS, yeah, that's a gap breakout. And see, now this one's coming in pre-market. So this one, you might be able to do a buy setup into the gap fill. So Diego, this is a good example of using the pre-market pattern to get on a gap trade. So, and then your stop would be under this closing pivot. So let's see if it can reverse here and then trade above a prior bar's high. But I like this from yesterday, APPN. Well, Gustavo, many times we will enter early because the chart suggests the overwhelming weight of the evidence that it will go through it. So, but that WFC was not one of those examples that I would enter early. But no, I actually would say 80% of the time we enter early based on bar by bar analysis, saying, well, that tail 10 bars away doesn't bother me. Like here's an example, APPM. Look, it's taking out, today's Tuesday, it's taking out Friday's high. So this prior high doesn't stop me from entering now. What's stopping me from entering now is just the broader market. what would be the stop on what depends if it's a day trade or swing trade, you know that. For swing, and whether it's a put spread, if it's a put spread and you're selling the 137s or below,